Hi friends, welcome to Konexio Technical Insights. I am Rahul Randeria and I would be conducting today's show. Now today let us directly go to the global charts because globally whatever the markets are happening, we would like to discuss that first and then we'll go to the Indian markets. So now this is the Dow Jones daily charts. Now first of all let me just show you the weekly charts of the Dow Jones. Now, if we see this Dow Jones, you can see the index has been correcting since if you say January 2022, and still the US markets are into time correction. It is not the bear market. Now, why it is not in the bear market? Yes, there are most of the things which have been discussed. The US is going into recession and all sort of things, and US markets are going to tank. But looking at this particular charts on the weekly basis, it is not into a bear market. Yes, it is into a time correction. Now let us try to figure out how it is into a time correction. Now this is the weekly charts. I have taken it since 2016. Just first of all, let me put a horizontal line so that we can have a clear view regarding how the charts are panning out. Now you can see this. This was the previous resistance, which was in February 2020. For 3 months, January, February, and March, for 3 months, almost Dow Jones felt major resistance. Then Corona came, market tanked, and slowly and gradually again it recovered. The all losses in next after hitting the lows of in next 8 to 10 months. Again at those levels, it consolidated for some time and it gave a breakout by a gap up opening and again started rallying, made a high of 36, almost 37,000, and after testing those levels, it is into a time correction. It is making lower tops, lower bottoms, and again you can clearly see earlier where it was resistance area, now it has become a major support. Now this is the weekly charts. Now just let me show you the Fibonacci retracement. We have seen that almost if we catch this rally from here to here, Dow Jones has already corrected almost 38% of retracement of this whole rally. You can clearly see this. The 38% retracement is just around 29,800 odd bucks. Yes, definitely it has pierced little bit those levels. But if we see this resistance, now it has become support. So what we feel from here, that now if we go to the daily charts, we will have a clear view that the US markets are into a deep oversold territory. Now you can see here, clear view of daily charts. From here, it has been correcting. Now you can see RSI was into deep, highly oversold. Now it has come into a deep oversold territory. It has, if I stretch the chart, it has pierced into the deep oversold territory, and it has given a little shadow at the lower levels on Friday. So definitely we feel that. So definitely let me put again the RSI, so we will have a clear view regarding what could be the trend or whether we see a bottoming out formation here. Now let me put some more light to this particular RSI. You can see here clearly multiple times when RSI has taken support near these levels, Dow Jones has moved. Here, if we take here, you see here it has rallied. Again here it has taken support, Dow Jones has rallied. Again it has taken support, it has rallied. It has taken support, it has rallied. It has taken support, it has rallied. Again the so multiple times Dow Jones has taken exactly support in RSI at those levels, and from there we have seen a rally. So now let me go to the other indices of the world. I will just specifically talk about the European. Let us talk about the CAC 40 index, which is of France. Now here you can see it has rallied from the levels of 4,500 after Corona. Sorry, it has rallied from 3,600 till 7,400 odd marks. Almost it has what we call as almost more than 70 to 80%. Now this rally has also corrected almost 38%. Now here also you can see that RSI has also entered into a deep oversold territory. Here in CAC, the France index has also shown multiple times. So here taken support at this support region, CAC has rallied. Now here second time it has taken support, it has rallied. Here it has taken support, it has rallied. Here it has taken support, it has rallied. Here it has taken support, it has rallied. So multiple times, same thing which we have seen in Dow Jones, it has happened in CAC, which is the index of France. So here you can see FTSE, which is the European, one of the European stock exchanges. It is also into a time correction. It is going nowhere. It is moving to a very broad range. You can see multiple times RSI has taken support at those levels. It has bounced back sharply. You can see here you can see a rally here taken support. It has rallied here. So multiple times you can see it has rallied from taking support over here. So now here also it is showing that uh, it has entered those levels. It has rallied from the levels of 4,800 till 7,700. It has almost corrected till 23%, maybe almost here and there, 23% correction. So it is into this index is also into a time correction. The global markets have entered into oversold territory. Each and every US markets as well as the European markets has entered into the 30s of RSI, which is oversold territory. So we can see a bounce back, not a dead cat bounce, but after a consolidation, after making some sort of bottom. I'm not saying that from Monday onwards it will start rallying. These American markets as well as the European markets might start making bottoming process from these levels. Maybe it will take some couple of weeks, maybe 2 3 weeks, or 2 to 3 weeks or 4 weeks. I don't know the time, but looking at this particular pattern, we feel that the global markets are here to say are showing some sort of exhaustion at these levels. It would consolidate, make some base, and then we might see a rally coming in at the towards the upward trajectory. So now let us go to the Indian markets. Let us discuss Nifty first. On Nifty, you can see we have been discussing a rising channel. On Friday, it has broken those channel. Nifty has closed below that particular channel. It has given some sort of weakness or shown some sort of weak trend at these levels. But on daily basis, it is showing weakness. But if we see on the weekly charts, still, the candle has just entered. I mean to say, the broken those levels. Still, it is not showing any sort of engulfing bearish or something like that. Yes, it is showing an inverted hammer, but this kind of hammer at these levels might give. I'm not sure about that, but many times it has happened that it breaks particular support region it and gives a whipsaw. So we might see a support coming in almost around maybe 17,160 odd mark, and then we might see again Nifty rallying from the lower levels. Why I am saying this? Because the global markets are showing some sort of oversold region. Now they are poised for a bounce back rally from those levels. So I'm not saying that Indian markets are temporarily slightly weak. Primary trend is still intact. What we feel, the trend is still intact, and we are having a view that Nifty will again cross 18,000 mark. It will sustain above those levels, and there are chances that Nifty will cross 18,600 maybe in next couple of months. But definitely, as at this point of time, now let me tell you one thing. Next week is a monthly expiry week, so we see huge volatility into our markets as well as the global markets. In our markets, because the current most of the trading sessions would be for rolling over the current position into the next month series. So we might see a zigzag movement, highly volatile session. It will be very difficult for traders to trade, but still the view would remain that if Nifty drift down towards maybe 17,200 mark or 17,160 mark, it should be used as a buying opportunity at the lower levels. So friends, now let us discuss the Nifty supports and resistance level in the Nifty for the next week. The first support in the Nifty is placed around 17,215. Second support is around 17,171. and third support is around 16,929. Whereas on the upside, the first resistance in the Nifty is placed around 17,497. Second resistance is around 17,642, and third resistance is around 17,888. So these are the important supports and resistance level in Nifty. Now let us go to the Bank Nifty charts. On the daily charts, Bank Nifty has also broken out from the rising channel, which we have been discussing since last couple of months. You can clearly see this is the rising channel. Bank Nifty has shown a breakout from the rising channel. Yes, Friday's candle was a weak candle, and a further cool off from these levels cannot be ruled out. But as I said, the global markets would be the only trigger which can give a counter rally throughout the European markets and American markets. In the next week, we are having a monthly expiry, so one needs to be cautious while going short, or one should avoid going short. Just try to buy at the lower levels and buy for a counter rally. Uh, Now let us see the important supports and resistance level in Bank Nifty from these levels. The first support in the Bank Nifty is placed at 39,200. Then second support is placed at 38,803, and third support is placed near 38,472. So these are the three supports in the Bank Nifty. Whereas on the upside, the first resistance is placed near 39,865 is the first resistance. Second resistance is around 40,073, and above that, the third resistance is around 40,630. So these are the important supports and resistance level in Bank Nifty. Traders should follow these levels and try to play for short, small moves throughout the week, at least till Thursday. Now looking at to the the each and every charts, the global chart, the American charts, European market charts, as well as the Indian market charts. European markets are into deep oversold territory. Counter rally cannot be ruled out. So I would again suggest that one should be very cautious while going short, or just try to avoid going short at these levels, in at least in Indian markets. Now let us come to the third segment of our show, which is option analysis. You will see on the charts the option data of Nifty calls. In Nifty calls, we have seen that the action was seen in 17,400 calls, with 17,500 calls, 17,600 calls, 17,700 calls, and up to a certain level 17,800 calls also. You can see because of the Friday's fall, there has been a significant drop in the option premium. Implied volatility is also rising. It is between 18.58 to 18.71. You can see there has been rise in the open interest, there has been rise in the volumes. So the smart money might have done strong call writing of these out of the money calls. So they might be thinking that next week maybe Nifty on the upside could be capped, maybe around 17,700 could be the cap at least for the next week. So Nifty might be showing highly volatile trading sessions for the week. So a gap down or minor gap down cannot be ruled out. Now let us go to Nifty puts. The action was seen in 17,200 puts, then 17,100 puts, 17,000 puts, 16,900 puts, and 16,800 puts. Now here you can see there was a rise in the open interest, rise in the volumes, rise in the implied volatility to it is between 20.79 to 21.52. It has already entered into a danger zone. So Monday, if there is a gap down, it will enter into a danger zone. The percentage change in the Nifty puts is already positive. So the smart money might have bought Nifty puts. Looking at that, Nifty might further slide from these levels. So we feel that on the downside, maybe 17,100 could act as a strong support from these levels. And from there, we might see some sort of bounce back coming in to the Nifty. Now friends, let us come to the Bank Nifty calls. In Bank Nifty calls, the action was seen in 39,500 calls, then 40,000 calls, and 40,500 calls, and up to certain level also 40,700 calls. Now here you can see there has been rise in the volumes, rise in the open interest, implied volatility shooting up. It is between 24.36 and 24.43 and 24.98. There has been a significant drop in percentage premium of the Bank Nifty puts. Now here we can see that there has been a sharp fall in the Bank Nifty option premium, just because of the smart money might have started writing out of the money Nifty Bank Nifty calls. So they might be seeing that market might remain under pressure because of the monthly expiry for the next week. So now let us discuss what we have observed in Bank Nifty puts. In Bank Nifty puts, the action was seen in 39,400 puts, then 39,000 puts, and 38,500 puts. Now here you can see there has been a rise in the open interest, there has been a rise in the volumes, there has been a rise in the percentage change, and most important thing, the implied volatility. The implied volatility has shoot up between 23.95 till 26.38. Now here we feel that some sort of weakness could be there, but as I said, looking at the global charts and even the Indian markets, we feel that a counter rally cannot be ruled out from these levels. So one need to be cautious if there is a 200-300 points of correction from these levels, and we might see a counter rally or short covering bounce from those lower levels. So one need to be cautious in the markets from these levels. So friends, let us come to the final segment of our show, which is positional call. In positional call, I have identified one stock. The name of the stock is Tourism Finance Corporation of India. Now, the name TFCI. Here you can see the stock has given a breakout with strong support of volumes. Now here you can see it has given a flag pattern breakout or a channel breakout, whatever, both are being seen on the daily charts. Let me put RSI. These are the stocks which can give good returns from these levels, just because the festivals are coming, people are going out for uh, traveling, what we call as a revenge traveling. So these are the calls which these are the stocks which might give decent return from these levels. Again, after Diwali vacations are also coming after 1 month. So these stocks have potential to give a decent return over a long period of time. Now you can see this is the daily charts. If we see from here, it has shown that this is a pole, this is a flag. Or even if we can take a conservative look of just a channel breakout supported with strong volumes, the stock has potential to give a decent returns from these levels. So long-term investors as well as swing traders, those who want to take a call for next 8 to 10 months, can buy the stock in the range of 72 and on corrections to 68 for an upside target of 95 to 105 for long term. These stocks are slow moving stocks, defensive stocks. So definitely the volumes are coming, the price, volumes, the indicators are giving a strong indication the stock is poised for an upside rally for long term from these levels. So again, I would like to say the long term investors as well as the swing traders or positional traders can accumulate the stock in the range of 72 to 68 for an upside target of 95 to 105 in the next 8 to 10 months or 12 months from these levels. So thank you very much, friends, for watching the show, and have a nice trading week. Thank you.